Hello, traders, and welcome to today's live event. Terry, how are you?
I'm great. How are you, Pete?
I'm doing good. I think that we're like everyone else right now. We're just watching this market float higher. Fundamentals don't matter right now. We don't, not that we have any fundamentals, but the government shut down. Who knows? Jobs report? What jobs report? So we did get a couple of pieces of data last week that were not produced by the government that do show us that the job market is slowing down. And one of those reports was ADP, showed minus 32,000 jobs in the private sector during the month of September. And we also got Challenger Gray and Christmas, and they show that there continue to be a lot of planned layoffs by companies. The only silver lining to that was that the number had improved slightly. So again, still a negative number, still planned layoffs, just not as many as we saw the two previous months. But the whole year is on track in terms of overall corporate layoffs to hit levels not seen since COVID, since 2020. So that's not a particularly great sign right now. But the
I
market
mean, the
doesn't
only
care.
fundamental thing that I see, Pete, I don't know how you read on it, is obviously everyone talks about gold is at all-time highs here, and if you take the into account the rise in the price of gold, equities haven't gone up that much in terms of dollar for dollar. Um, that the rise in gold is really keeping equities afloat in terms of it's just sort of like a false push, given how much gold has gone up. You know, it can work both ways because gold is also a flight to state. Gold has serves a lot of different functions. So
Mhm. Yes, or the other and kind of dovetails into that is if you look at the decline of the US dollar and you
yep.
adjust the market gains on a dollar basis, that it really hasn't gone up as much as it seems like it has.
Right. I mean, at some
So
point, something has to give, but this market shows no sign that it wants to give anything.
right. Yeah. And you have to put your money somewhere. I mean, you can only be in cash for so long. And then you've got a couple of other uh, drivers right now, which you have AI, which is just absolutely bonkers in terms of some of these smaller stocks that are not so small cap anymore. They're actually rallying. They've gone parabolic. You have the same thing with cryptocurrency stocks and some of these mining companies. So you've got those two themes, which are definitely exciting a lot of investors too. And it does have kind of a, I don't know that it has a 1999 or year 2000 feel to it, but certainly you're starting to get that level of investor excitement. I believe that margin levels right now are at all-time highs as well, which tells us that investors and asset managers are fully invested.
I mean, I think we are right now, as someone just said in the chat room, Spectre high fiving the all time high, right? I mean, we're right there on SPY.
It's funny because, when you get to this type of price action, when the market hasn't made an all-time high for a year or 2 years, hey, wow, the market's made an all-time high. That's awesome. Now it's like a daily event.
Right.
There's another one. There's another one. So it just keeps floating higher. So, the difficult thing, and I did a video about 2 weeks ago or so, and I talked about the mental aspects of trading. And we need to be aware of fundamentals because we don't want to get blindsided by some type of news like an FOMC statement or a jobs report. So you need to be aware of when these events are coming out. But that awareness also causes a problem. And that problem is that we start watching the fundamentals and worrying about what's going to happen. And we take our eye off the ball. The ball is what's happening technically. And so if you are watching the technicals here, you can see that every time the S&P 500 gets above the EMA 8 and gets a little overextended, it either compresses or we get a pullback. And so these pullbacks in here right now, this is your sweet spot. This is your sweet spot. This is your sweet spot. And when I say that, it's because you know that these dips have been brief and shallow. And this is where you're going to get your consistent price action is after that dip. This is when on a day trading or a short-term swing basis where your trades might last a week or two, this is where you can get aggressive. This is where you can get aggressive. This is where you can get aggressive. Once you're above that EMA 8 and you start getting this price compression, now you have to be kind of passive and you're just kind of waiting for that next dip to happen. And that's where I am currently.
One stock
How have you
I'm
been
looking at a
positioning
couple here.
yourself? What's been working for you? What types of strategies are you currently using and
I
what's
mean, I
been
know
working?
you've been, I haven't posted, but I know you've been doing the put selling strategy, which is a great strategy to use in this type of market because you're getting some decent premium, and you got a market that's just floating higher. The short term put selling strategy is just you're. I always believe, and as you always said, you don't sell a put unless you find owning the stock. But obviously, you're also fine collecting the premium, and that is a really good way to roll. Uh, you know, I've been basically just looking at um, stocks that can, like right now, I'm looking at a stock like Apple or Amazon. Obviously, you could scalp Tesla all day long. You could probably just do that alone. But um, for the moment, it's the only thing that I am not that's sort of out of my repertoire at the moment is longer term calls or positions in things like an Amazon or an Apple because the market's so overextended. Very difficult to do that. Now you have earnings coming up as well, so I think this is going to be a very telling earnings season. If there's these tariff effects, if there's concerns, the market valuations are through the roof. So you're going to need a blow the doors off everything earnings season to maintain this.
Yes, and there's this bifurcation, if you will, in the marketplace, and it's you've got the technology stocks, in particular, any company that is focused on AI, all the chip manufacturers. Those stocks are taking off. They're seeing incredible growth. So those are the ones that you want to be favoring, but you also take a look at valuations and how far they've run. Is there a lot of gas left in the tank there or not? So that's one aspect of the market. The other aspect of the market is you start taking a look at a lot of these stodgier old companies. They could be interest sensitive companies like heavy equipment manufacturers, home builders. Retail has been pretty awful, and I think it's going to continue to struggle. So you've got this small section of the market that's done really well, and you've got a lot of the market that really hasn't performed well. So we're probably going to see that again this earnings season. Banks are going to be starting off the earnings season as they always do next week. I'm going to be watching what's happening with consumer credit. That to me is always the canary in the coal mine, and watching those bad loan write downs and watching the credit uh, default, credit delinquency rates.
So I want to ask, given that they have a small account, Matt Copus here, uh, can I just use a put credit spread in place of a naked cash secured put? They're two very different mechanisms there, Matt. Because with a cash secure put, obviously you're going to need to have more margin to back it up. So if you have a small account, I get why you're asking the question. You might not be able to do the cash secure puts, but with cash secure puts, obviously, um, you are doing that, and then in your one scenario, you're just collecting the premium as the option goes down to zero because the equity price stays above your put price. And the other scenario, you're being put the shares, right? So you are you're taking on the shares, and you don't mind it, right? You don't mind taking on whatever the price point that you got on taking on those shares. So in your worst case scenario, I guess you could say, is you now have the shares of the stock. Now on a put credit spread, you are as opposed to a debit spread, your risk reward is reversed, right? So if you have a put credit spread where it's a $5 spread between them, you're generally going to be getting a dollar credit, and you're going to be risking $4. So when you have that type of scenario, you need to have a success rate over 85% or somewhere there. Um, and that's why we do these sort of out of the money put credit spreads where the short put is has at least two levels of strong support above it. Uh, and we've done this for a long time. They generally have about, I don't know, be a 90, 95% win rate on them, not counting the number of times where you can buy back the short put and let, if it turns against you, let the long put run. But it's two very different types of trades. One is, obviously both you're hoping it stays above a short put price, but one you're taking assignment and one you're not. So it's not really a replacement to it, and you're looking at kind of different things and different criteria to go along with it.
Yeah, those are all really good points. And so, a couple of things. One is I have a small account. Okay. If you have a small account, then you don't start over leveraging positions, which is basically what you're doing when you do a bullish put spread. Now I have to put up less margin so I can do more of them. That's good, right? No, because you're leveraging yourself. You are not able to take assignment. I'm going to show you a trade that I did earlier this week. In fact, if you go back and look at my video from Sunday, I highlighted RKLB. And here you can see this beautiful breakout right here. Here he had mentioned, well, you want to do this on a stock where you've got defined support levels. Well, if I looked at defined support levels all the way down here, I'd have to go so far out of the money that I can't get the credit that I need to do this trade. So I've got to be able to at least bring in a credit that is 20% of the distance between the strike prices. It's going to yield a 25% return based on my margin. That's not what I was doing here. I was buying this breakout right in here on RKLB in essence. Okay. I missed it. Crap. The stock took off on me. Would I want to buy this stock at this breakout back here where I missed it? Yes, I would. Well, great. I'm going to sell an out of the money put. I think I chose a $50. I did choose a $50 strike price. I was able to get filled on that Monday. And I believe I went out 3 weeks to the October 31st options expiration date. And my premise is, would I buy this stock at $50? And yes, the answer was absolutely positively. I hope I get assigned. Yes. And I hold half the strike price in reserve, $25. So I can buy this stock on Reg T if I'm assigned. Completely different mental state of mind than selling a put credit spread. So, yes, please assign me. I want to buy that stock. I want to enter this position. Well, if the put expires worthless, I'm going to make a 10% return in a few weeks. A lot of traders will scoff at that because they want to make doubles and triples in 2 days. Well, good luck with that. So, if you can generate a 10% return in a few weeks, you can do the math. You can figure out what your annualized return on your account would be without taking a lot of risk. Beautiful trade, especially if you are leery of the market at an all-time high with all this stuff going on in the backdrop. So we've got a lot of people who just flat out aren't participating right now in this market rally because they are afraid. I get
I
it.
just
I
went long,
understand.
by the way. I
I'm
just went
sorry.
long Apple. Um,
Okay.
I,
So that's the distinction with selling out of the money naked puts. When you do a bullish put spread, you're really leaning on those defined support levels, and it becomes more of a probability trade than it is, gee, I want to buy this stock at a better price. You're looking at multiple layers of support. And I think I did a Tesla bullish put spread. And again, that was a different scenario. I'm really looking at it more from a probabilistic standpoint. Leverage is the problem, to address Matt's earlier question. In one case, I'm holding enough in reserve to buy the stock. In the case of doing a bullish put spread, there I'm really looking at different types of setups where I've got multiple layers of support and a very high probability that that spread is going to expire worthless and that time premium decay is going to work in my favor. And I've got two very long videos on my channel specifically addressing bullish put spreads. Apple. Let's take a look at Apple. Let's. What did you
Yeah,
do?
I went long Apple at
What did you do?
258.48 here. Now, normally I don't take this trade, and if you look at the daily chart, you'll see why. Right, it's in a very narrow channel. Um, in fact, the trend line that you can draw from 923 and just connect it all the way to where it is now comes in pretty close. It's at around 260, right? And then there's a trend line right below it. But because I have such a narrow channel here, I also have a very well defined areas. So if it breaks through the upper trend line, I'm going to add to this trade. If it breaks below the lower trend line, I'm going to close the trade for the loss. So I have a good bracket, a narrow. It's not a wide bracket. It's a narrow. So I have a bullish stock that looks like it may want to break out of this compression that it's been in. It's been in this daily compression now for over 2 weeks. And I have pretty clear lines in the sand for myself as to where do I add, where do I get out. And that's why I'm taking the trade. Now, you obviously can look at this in a conservative way, which is I want to see the break of the trend line on the upside before I take the trade. That is totally legitimate way of doing it, right? That is, in fact, in many ways, a better way of doing it, where you say, look, I'm not taking this trade until I see that confirmation. I need to see the break on the upside. It broke out of the compression. Now I'm taking it. I'm doing this in a way that allows me to add if it makes that break. But yes, I'm also taking on a little bit more risk that it could visit the downside of this channel. But thankfully, if I look at that downside here on Apple, looking at a price point of really 256. So my max loss here in my head here is around $2 a share, and I have a lot of upside.
Uh, let's do a little price action analysis and I'll describe what's happening on Apple. So, Apple has news, stock gaps up. Okay. This, I believe, was the release of their new phone. You get a little bit of sell the news after this long green candle. Half of this long green candle is preserved. That's what we want to see because it tells us that this move is legitimate and that buyers are supporting this stock. You're going to see a little profit taking after a big move up in a stock like this. So the buyers have to wear these sellers out. They have to exhaust that supply, and it takes time. And what happens is that you start seeing the buyers get a little bit more aggressive and a little bit more aggressive because they're wearing out that resistance. And you see that in the form of higher lows. And eventually you get a compression breakout to the upside. So this has all the tells as far as I'm concerned that it's going to move higher because this big move up has compressed and all of these gains have been preserved and these buyers are getting more and more aggressive.
Quick question from Chi. First question in the chat room: does account swing proportional to account size as it grows? If I have a $500 in swings in a $50 account, should I expect 55,000 in swings in a $500,000 account? You know what? What are your goals? Right? Is this an account that you have where, let's say, you have a $500,000 account, but 400,000 of it is in the indexes, and you're playing around with 100,000. You want to get some passive income, so you're selling some puts, You are, you're swinging a couple of put credit spreads. You got some brackets going on. Uh, in which case that's perfectly reasonable. Where you're just going to keep it proportional, 550K, 50,000, because you're basically just saying, hey, I'm only going to play with or risk 10% of this. 90% of it, no matter how big the account is going to be going into swing trades to try to get a little bit more aggressive. So it's up to you, obviously, to decide um, what percent of your account is going to go into a slightly more aggressive strategy. When you're talking swing, now you're not talking day trading here, you're talking swing trading. Um, and again, that also goes to what is your history, right? How good are you at swing trading? What you look at your journal? What is your win rate? What is your profit factor? Is it over 1 month, 6 months? I mean, if you have a year of showing, hey, I consistently make profit swing trading here, and that 10% I'm allocating is giving me a much higher return than the 90% I'm not, then you may want to increase that allocation. It really is a personal choice. There are people that have $500,000 accounts and it's entirely used for swing trading, and some who use it and it's entirely used for long-term investing. So it's up to you.
Yes, and market conditions will drive all of my decisions. And there will be times when I focus a lot more on swing trading. If you show me a bear market cycle that's completed and we're going into a bullish market cycle, I am going to be swing trading on a longer term basis, and I'm going to be adding to those positions as I have price confirmation. If you show me a market where I've got long green candles and long red candles on a D1 basis, that tells me buyers and sellers are paired off and that there's a lot of volatility, I'm going to be going to day trading primarily because I don't want to take a lot of overnight risk. So the amount of money that I'm allocating to swing trading to day trading is dependent on what the current market conditions are. And if the market conditions are real stable and we get a move higher like we're seeing now, then it's going to be fairly balanced and I'm not going to be moving much between the two different strategies. And then also, as Harry mentioned, personal preference. There are a lot of people who can't day trade. You've got a full time job. You can't day trade. So you are exclusively a swing trader. So they won't have any balance per se. It's the professionals who have the ability to day trade who would actually have the mix.
Absolutely. Um, hey, Matt, you said you went long OR. Should have you taken gains on the open today? Yeah, you should have. Uh, when you get gaps up like that, Dave Wise always calls them gifts. Take the gift. You got a gift this morning on it. Just take the gift and move on. Unless you're looking as to a long-term investing trade opportunity with that, take the gift. Um, so here, how do we make money, Pete, when we can't swing aggressively and SPY moves only 0.2% a day? Everything feels like it's in slow motion. I'll give the example again. I told a lot of people what my son has been doing over the summer using just swing trading on his account. He's continuing to do that now that he's back to school. And just the other day, he decided he's going to, he bought a bunch of calls in SoFi. And 2 days later, those calls are up around $2.50 a call. So, makes $250 a call, 3 calls, $750 on a couple of $1,000 account on one trade. That's how you make money swing trading.
I mean, I've been absolutely killing it. My win rate's somewhere around 95% on all of my swing trades. And I am finding stocks where I like the current breakout. I like the strength of the stock. I just don't want to engage it after a big run up. These stocks have very high option implied volatilities. JOBY was just one that I bought back yesterday. And so I'll bring that stock up. So back in here, I had this nice breakout on JLBY. It was about 2 or 3 weeks ago, and I sold the $15 puts for 60 cents. That's yielding me an 8% return in 3 weeks. And the stock pulled back today, and guess what? I just sold some 1550 puts for 75 cents that expire in 3 days. There was a secondary stock offering, which the company is going to use to grow in the future. So they've already discussed why they needed to do this and how they plan to use the money. Hasn't changed the company in any regard. Yes, it's diluted the shares, but the company's business model is still good, and they're going to deploy that money to make more money. So I'm fine owning that stock below the 50-day moving average and a VWAP-E. So here's an instance where you actually do have two big levels of support that you can also lean on.
It's funny, the same the same now in the other chat room, the same person who just basically seems to wake up in the morning every morning and goes, "Why is Harry in SPY weak puts? Why?" And then follows you and me around asking that question uh, nonstop. I keep those puts. I have them because a it's a hedge, and anytime the market is at a consistent overextended all-time high, I am going to have a constant hedge on. Most of my positions are longs, right? I'm long Oscar right now. I'm long Apple right now. Most of my swing positions are long. So I'm holding all these long positions. I'm going to have a hedge. And by definition, a hedge is if it kicks in, great, I'm covered on any of the longs. So let's just say tomorrow the market decides to say, screw it, it's too much. Bubble burst. Boom. Well, you know what? I am going to get killed on Apple. I'm going to get killed on Oscar. But my hedge is going to cover me. Now, some traders don't hedge. I like to have that hedge, particularly if I see an increased likelihood of a black swan event. If I see an increased likelihood of a black swan event, I'm going to hedge. However, it does seem like you obsess about those hedges a lot more than myself or Pete does.
I've had the same bullshit. Could be the same person. I don't
It's the
know.
same person.
But yeah, but I mean, so back in, and you're not always going to be confident in what the market is going to do. Ding, ding, ding. This just in, folks. So back in here, yes, I saw this sell off coming. I made a lot of money on the short side in here. In here, we sold out of the money puts aggressively. I knew there was a bounce coming. So they ignore this move and the amount of money we made here. They ignore this move and the amount of money that we made on the bounce. In here, I was very cautious because I was looking for a lower high double top. I was not shorting in here. I did have shorts that I was looking at that I would have taken, but we got a breakout above the major moving average. I still wasn't able to embrace this breakout. I think that was the China tariff news or the China trade deal, or who knows back then. I'm pretty sure that's what it was, though. So the market comes down, it tests these 200-day and 100-day moving averages, and it flies off of it. Okay, it didn't spend time around here. It flew off of it, and it told me, all right, buyers are definitely interested. And now this bounce in here is legitimate. So in here, I was very neutral. I didn't have good market confidence. I was long, I was short. I mean, I had long and short picks because both sides were actually working at the time. And then as soon as the market started to rally from this point forward, I've been long. Every freaking pick has been long, but they want to remember, ah,
Mm-hmm.
didn't know what was going on in here. He's not a good trader. Folks, you're going to go through these moments when you don't have a high level of confidence. What does that mean? You trade less until you have clarity. You do not embrace or engage the market because you're going to kick yourself. You're going to be confused. You're going to be frustrated when you're losing money. So just keep it light and wait until you have that clarity. And once you have it, you can determine what your level of confidence is and how aggressive you want to get with your trades. There are people out there right now who in here have been gangbuster bullish, gotta have it, go, go, getting long as hell. And they've made a lot of money. Good for you. You had the confidence that you needed to embrace this rally. I couldn't get that aggressive with it, but I still did well.
I'd like to thank Lestros for his well thought out or her well thought out question on CLSK. Your reasoning very well reasoned out there. Wish we got more questions like that. When I look, I mean, I don't know, Pete, when I look at Clean Spark, Obviously, it presents bullish on the daily chart. I don't love the wicks on this. It's a pretty high volume stock. The last month or so, since the middle of September, volume's been kind of way up there. I don't love these wicks. What it's showing me is the stock tends to open high and then retrace, open high and then retrace. It can't, but at the end of the day, it's still always, it looks like it just keeps marching up. It just, I don't love the wicks on it, but look, this is not a bad long. If on something like today, I'd wait till it got, if it can get back above VWAP, it's a pretty good long. I just don't love these long wicks the way it's presenting. It's just a little bit too much intraday volatility where it can't seem to really hold all those gains. There's still a lot of sellers active.
Great point. When you look at a daily chart, you can tell instantly. I can look at this and tell you, I know what the day intraday price movement's going to be like. It's going to be choppy. It's going to be all over the place. And you can see how it's distancing itself from the EMA 8. So if you are looking at this and you're like, man, I love this story. I love the reason that the stock is rallying. I feel very confident in it. You don't want to chase up here. What can you do? Well, where would you like to own it? What is a good price where you can own it? You don't look down here and you go historical implied volatility. Oh, hey, look at that. It's over one. Ding, ding, ding. This is going to have some rich option premiums in it. Where
Mhm.
would I feel comfortable owning this stock? This could be a starter position. Well, I like this little horizontal resistance level in here, and that puts me around 1537. Hey, I wonder what I can get for the $15 puts. Hover over the E. Earnings coming out December 12th. I need to stay inside of that December 12th timeline, which gives me plenty of time. Given that earnings are back here, that might be a little off. So September, probably check the earnings. Make sure it doesn't release earnings anytime soon, and then go in and check to see what you can get for your option premiums. And we'll go in and take a look at what that $15 put sells for. Can we get any premium for it? October 31st, $15 put. I've got to put $7.50 up, and I can get almost 60 cents for it. That's probably going to be about a 7.5% return on that. Are you happy with 7.5%? Would you own the stock at $14.50 way down here? And if not, be rewarded 7.5% return on holding half the strike price up? The answer is yes. There's your trade.
Here's a question that every trader should know the immediate answer to. Is it safer if I buy in the money calls, paying more premium than buying out of the money calls that are way cheaper? Yes, 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 and 1,000 times yes. In fact, your delta should be. I don't like to do less than delta 0.75. Options give you leverage, right? The more premium you pay, the less leverage you're getting. If you have a delta of 1, you're getting pure 1-to-1 leverage. The stock moves up a dollar, your options are moving up a dollar, and you're getting 100-to-1 on your option on your leverage there. Out of the money calls, out of the money puts are probably they're the scratch off tickets of trading. Now, the appeal of them, I get. Oh, they're 25 cents each, which is really $25 each, and I could buy 10 of them. And then if we get a big parabolic move out of nowhere, then these are going to pay off, right? Or something like a Tesla, and you buy way, way, way out of the money puts or calls, and you hope that a news event comes along and triples or quadruples or 100 times, whatever your strike. Um, the problem is that happens so infrequently, and the amount you lose on the out of the money options adds up to when you finally get that big hit, it doesn't cover it. And you can keep looking at the anecdotal Reddit article you want. I mean, $200,000 on buying $5,000 in Tesla calls before it shot up $90, or I bought app puts. These are this is like walking into that liquor store and it says they had a lottery winner there, and it's like, oh, it could be me. It's not going to be you. It Also understand how option contracts work. you're literally saying it's like, oh, I want to buy this house. This house is $1 million, but I'm not going to buy it right now. I'm going to give you $50,000 right now for the opportunity to buy this $1 million house at a 1.5 million in a month. So now, unless the price of that house all of a sudden jumps up, you just that house has to be at 1.5 5 million in order for that contract to be worth what you paid for it. So you're basically saying, I want to be able to buy this stock at a higher price than it's currently worth, and I'm going to pay you for the privilege of being able to buy this stock at a higher price than it's currently worth. That's what the out of the money options are. It so rarely will pay off, and is one of the number one ways the traders lose money. So please get less options, pay less premium, go deeper in the money.
Yes, and that whole premise of safer kind of cracks me up because you're not going to buy one deep in the money option versus one out of the money option. Shit, I could buy 50 of these. I'm going to buy 50 of these out of the money call options, or I'll buy 5 of those because that's all I can afford. When you use leverage, you've got to use it very, very selectively. And buying out of the money options is typically a loser's game. You would have to have the most ultimate conditions. And when I'm talking ultimate, like I'd mentioned earlier, you've got a bearish market cycle that has just ended. You have confirmation that the bullish market cycle is just starting. Asset managers are gaga crazy to buy any stock that they can get their hands on. This market's going to fly 10% higher in the next month. Okay, that's the kind of tailwind that you need to have to provide you with the fuel to push that stock higher. These stocks in general have been depressed. You've got so much demand coming in that you know that impetus is going to be there to fuel that stock. You rarely have odds that are going to put you in a position to take advantage of that. Maybe once every 3 years, you get an ideal setup like that where you would consider it. But for the most part, and when you're looking at a market that's just barely grinding higher like this, it's almost compressing right up in here. You don't have the market tailwind to suggest that, yes, I have to own this stock and buy it out of the money options that are 20% higher. You're going to lose 99% of the time on those. So yeah, go in the money, high delta, zero point 0.7. And here's another thing: buy lots of time. Go out past the next earnings release date when you do that. Because, Harry, how many times have we seen people, you buy options and they expire worthless? You lose everything you just put into them because they're at the monies or out of the monies. And then you watch a stock take off,
All the time.
right? And you lost money. Man, there is no worse feeling than that.
Yeah, I mean, at least when you sell puts, if it doesn't go your way, you own the stock. You can hold on to the stock. With an option, you get a short-term option, and it'll just doesn't immediately go your way. It will drain out, and if it's out of the money, it will drain out fast. Um, yeah, Sam, I would be worried about Google here. If you went long 2 days ago, it just broke below the EMA 15. It's relatively weak today. I don't love the position. You might want to, your stops at 242. Fine. I just would be very careful with it. Um, and would I buy TEM or INOD? I like INOD better, but it's just a safer bet. If you want something that's a little bit more volatile, you buy TEM. They're very similar.
I am long Google from a few days ago, so I'm wondering if you're following me. But I've got a longer term position. I'm looking at the stock as having what I feel is a base that it can rally from into earnings announcements. Whoops, that's good. The stock good. Obviously a typo. Good does not look so good, by the way. Wow, that is a nasty decline, and that is actually a pretty nice looking short. I'd have to check that one out. So Google, let's get back to that chart. So Google, I like the fact that it was able to run up and preserve all of these gains. And you got this little pop up here and this breakout. And now we've come back and we've tested that breakout right there and we found support. So I like it right in here. I would continue to hold on to it, but it depends on what your holding period is. Would I buy it right here, right now? You might want to see it at least get above that EMA 8. And I'd like to see the open of that long green candle preserved. So I'm kind of on borrowed time. It's a starter position, but I'm not overly concerned with it. And I need to see it start making some progress. I think Carrie was pointing out earlier, you can see red line below zero, relative weakness. Yeah, you don't want that to persist for very long. You want to see some improvement in here. And it's not rallying today when the market is up. So it's on borrowed time for me, but I'm sticking with it. It was a longer term swing.
Does it make sense to just day trade the second part of the day? JA seems like he can only engage with the market during the second half of the day. Obviously, you're getting more volatility in the first half of the day, but there's still plenty of great day trades right now. I mean, look, you could short app as it approach. It just went up to VWAP and now it's falling short of it. You can do a day trade right here, short app. You just got to look for the opportunities, and actually, you might be better day trading the second half of the day because you're more selective, right? And there's so many different options and choices in the beginning of the day. You might be a little bit more selective as to what you're choosing in the second half of the day. And also, if you're truly day trading it, your time frame isn't as you don't have as much time for it to work. So you have a shorter fuse on closing the deal and getting out. It's just a slightly different mindset, and you're just a little bit more choosy. That's all. Um,
I'm going to talk a little bit about app because we have had a member in the chat room who bought app up in here on the EMA 8 dip a few days ago. And then blam, this long red candle. And they were asking, well, what should I do? Well, you have to check the news once you get an event like this. This is nice, steady price action. Typically, you're not going to see this type of price action and then have a big drop down. Why? Because these are institutions who are in there accumulating this stock, and they tend not to do that and be aggressive and buy it up like this when there's uncertainty surrounding the stock. As it turns out, this was an SEC investigation. They're investigating their accounting practices. And so my suggestion was you've made back half of this long red candle. You want to see it attack that open from the red candle 2 days ago. If it can't do that with ease and hold those gains, you are looking to exit this. This is not a good sign. Whenever you have the SEC sniffing around, and that you could not have predicted this either. So you shouldn't feel bad that you got into a losing trade like this. It happens. But when you see material news like this, you should err on the side of caution. You should get out and yeah, SEC, who knows what they can find when they start sniffing around. So that dark cloud is going to hang over this stock. So yes, my suggestion was exit as best you can, take your lumps, move on.
DJ Artificial went long on LRCX today. Strong pullback, justified entry for October 31st expired call. Your call is spanning earnings, so that's fine. Just get out before earnings. I like it. I like the stock. It's a really nice setup. It's bouncing off the EMA 8 and 15. I have no problems with that one. And Stony Baloney, I have no idea what stock you're talking about. So
I was hoping you were going to give me a symbol because I didn't either.
yeah, I'm like, okay, what I can kind of guess maybe, but no, I don't know what you're talking about. No.
TEM. Okay. TEM. Let's take a look at that one. Oh, you already did TEM and INOD. Okay.
Yeah.
TEM, not bad. Very choppy in here. You can see it runs higher, it pulls back. It runs higher, it pulls back. So be careful not to buy breakouts. This is the kind of stock where I would let it run without me versus buying a breakout. It gets a nice pullback to the EMA 8 and it starts to find some support. then you can get long, but I would not buy these breakouts. So you can see there's a breakout right there. Blam. Reverses, pulls back. Beautiful breakout here. Here we go through horizontal resistance. Yay! Ah, crap. This is not the type of stock that I like to trade when it's choppy like this. It does have an uptrend, so it's not the worst I've seen. There's some stocks that I see people ask about, and they're in a horizontal trading range, like right here. This kind of crap. Forget about this. This is nothing. There is not an institutional bias in there. Buyers and sellers are paired off. You want one side, buyers or sellers, to be dominant, and that's when you start getting price action like we've seen in some of these other stocks. I think let's take a look at INOT. I think that was a good one when we looked at that earlier. It had some very nice steady price action. That's what you see when buyers are in there. You don't chase up here. You still have to wait for those dips, but you know that the stock is going to find support because these institutional buyers are not looking out a week or 2 weeks. They're looking out years, and that's when you start seeing them bid up the stock and it finds great support like that.
Stony Bellini was talking about Ford. Apparently, bought it on 926 for that breakout. Continued up. I mean, obviously, October 7th is, yesterday is when you close it. In fact, you close it when it opens below the low of Monday. So you should have made a nice profit there. Chances are you held it a little bit too long on that drop yesterday, and today it's not recovering from that. It's still above the SMA 50, but considering you have calls and you are up a decent amount on them, yeah, I would have closed it yesterday at the open.
When you see stocks like this, folks, all I can tell you is you got to avoid them. Oh, there's a breakout. Oh, look, this is great. Fantastic. Here we go. Nope. So when you see this breakout right here from 3 days ago, and you look back at what the stock has done historically, are these breakouts legitimate? Does the stock have follow through? No, it doesn't. It tends to be very choppy. Versus, I'm going to show you a stock, and this is your poster child. If it doesn't look like this, you shouldn't be trading it. That is what you want to see. Okay. When it looks like that, big money is buying it. Now you've got a little bit of weakness on the back end in here. So if you've been long in here and adding to your positions, yeah, you're going to be, you know that this level of buying is going to eventually get some long-term investors interested, and they're going to try and buy this, and it at least should get back to the previous high or close to it. Double top, that's where you take your profits and get the hell out of the way, because now you've seen some organized selling pressure in here. But this is the kind of stock that you want to focus on. They're out
Um,
there. You just got to look. They're there. I could give you probably 15 symbols like that.
Lestros CNC, I don't like it. It's not the 200 SMA, by the way. It's the 100 SMA, and it has to show me its ability to actually get through the 100 SMA and open the next day above it. So I don't love it. STX you covered. Um, how do we feel about a Nike short? Nike short. I mean, I don't like it right now. It's green on the day, but as long as it stays below the 200 SMA, it's not a terrible short. It's just not. It's not a great. I mean, there's so many other better shorts out there right now than Nike.
I did take a short. I am not bearish. I took a short today. I'm not bearish on the market overall, but I have a stock that I think is a good short, and I took it today. And yeah, so this is not the worst short. You can see how it wants to get into this earnings gap right in here, and it's below the major moving averages, and it backed off hard from the 50-day. So yes, I think this is probably pretty decent given that Nike doesn't make big moves very quickly, and it's made 3 big moves in 3 days. I would wait to see if you get a little bounce in here. Um, but Starbucks is a short that I took earlier today.
You hate that fucking company.
That stock is it long term, I think it's going down on fundamental basis, and the technicals seem to agree with me. So I think the days of $7 cups of coffee, especially if you've got people getting laid off, are going to be few and far between. But yeah, I like this. We had two breakdowns below trend lines, so I do like this short, and it does help to balance some of my long positions. That's not why I took it, but it is nice to know that you've got a short or two in there in the event that the market pulls back. You're going to have at least some stocks that are going to be participating in the downside while some of your longs are taking a bit of a breather, pulling back a little bit. But yeah, and earnings are not until the end of the month, so there's a fair amount of time left for this stock to keep probing for support.
I'm going to run through a couple of these on the other chat. Would AV VA be a good short? Not really. You don't have much space until you get to the 50 SMA at 1521. If you want to take it for like, I don't know, 20 cents or something, maybe. But you have that what looks like fairly strong support. Would today be a good day to buy Tesla? No, it's not particularly strong today. Out of all days to buy Tesla, I would not make today the day. What do I think of Shark Ninja? I think it's crap. And it's, not a good short today, but it's overall a bear stock. I wouldn't touch it. I wouldn't short it, and I
Which one
wouldn't
is
go long.
that? What's
And then
that symbol?
finally, what do I think of the SoFi breakout? Well, it's not breaking out today, but if you want a nice stock to hold for, I don't know, 6 months or something, you're not talking about trading right now. You're talking about, oh, I'm going to be buying and hold the stock. SoFi, you could do a lot worse.
What was Shark Ninja? What's that symbol?
It IPO'd. When did that IPO? An IPO'd 2 years ago, I think.
Okay.
And it's been a pretty crappy stock ever since. I mean, it's a basically what do you call it? Cleaning, like
Oh, they make the vacuums?
yeah. Thank you.
Okay.
Vacuums.
Well, they must do the Ninja blender too, then, I guess.
Yes, yes, and it's appliances. Yeah, appliances
Okay.
and the vacuums and things like that. Um, that's what it.
Great.
That's primarily what it is. We covered Amazon. We covered Google, people. So I see people asking about Amazon and Google, and we already covered those.
Amazon, they've got Amazon Prime Days. So just be aware that as Amazon Prime Days go, so goes the stock. That could be great and it could be not so good. So yeah, stock right on the 100-day. What is the difference in Option Stalker Pro between LRSI and LRSI New? LRSI New means that the LRSI trade signal was generated the previous period or the one before that. So very, very recent buy signal or sell signal. And then of course it's dependent on which time frame you're using versus an M5 versus D1. But the system is coded so that it knows if it's on a buy or sell signal for all of those time frames.
I love CIEN, by the way. Someone just pointed this out on day trades. I think it's great. I think it's a great looking stock. It's got a nice daily chart. It's not extended. Looks like it's right now towards the high of its day. Looks like it's breaking out. I like this stock.
Yep. That's your pattern, folks. Those institutions are in there buying every dip. That's why you don't get dips. Every time supply comes to the market, every time there's a profit taker wanting to unload some shares, there's a buyer snapping it up. And that's why you get these nice tight patterns like that.
Okay. Wow, there's just a lot of questions today. No, we haven't
Oh,
covered
good.
AMD. Short-term short to fill
Yeah.
some of the Insta gaps. What are you? Are you high? Why the hell would anyone want to short AMD right now? That that that's insane to me. If you look at a chart like AMD and you go, okay, that's not earnings, that's a news event there. Okay, you find that's a Chat GPT news event there, and you say, oh, it seemed like it's maintained that pop, and today it looks like it's right back at it. And if your first thought is, I got to get in there short, I guarantee you will not be trading long, both figuratively and tech and literally. You will not be trading for a long time.
Yep, I agree with that. And so, similar to what I had just talked about earlier with a stock, you've got a big breakout like this. You had big news. Okay, it got a little bit ahead of itself and it sold off the day after it was announced. And so you had this candle that tested the midpoint of this long breakout candle. Okay, temporary support. By the way, I was long AMD overnight and I bailed on it for a small profit on the open today. I didn't care for the market action yesterday. I didn't care for the price action in the stock. It was a short-term trade. I had lottery, the $200 lottery calls, which incidentally, the stock was about $14 in the money. So no, I didn't buy at the money calls on this. I bought them nice and deep for a surrogate stock position, and the stock is continuing to power higher, which tells you that that initial supply of stock after that gap up has been worked off. And now this stock, there's your initial gap up, sell, 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 profit taking, profit taking, profit taking. Buyers have worn out all that supply, and now the stock is moving higher. That's a buy. That is a buy. Is it my buy? Is it the stock I'm going to highlight today? It could be. And maybe I even highlight selling it out of the money bullish put spread on it. 11.5. I'm not going to get very much for it. $26 out of the money. I could tell I'm not going to get much. But yeah, I would definitely look at selling it out of the money bullish put spread right there, given the price action I've seen earlier today. But missed it.
If you're in profit on eBay, the person in the $90 calls, you're up $1.50. Take your profit now. Yes, you should. eBay's relatively weak today. It fell below the SMA. If you made money on that play, then this would be a time to take profit. You don't want to see this thing fall below the SMA any further. It's already relatively weak today for whatever reason. I would take your gift and run with it and take your profit. Yes.
Again, look at this chop in here. Okay. How are you going to predict where this stock goes next when it's doing this from day to day? There's no way to predict it. So you have to avoid situations like that because you are not going to be able to. I had a video I was going to put up, so I'm going to look for that. But you're not going to be able to predict future price movement. That's how we get paid, is by predicting future price movement. If you cannot look at a chart and say, I know exactly where that stock is going, keep looking. Keep looking. A breakout through a major moving average. So if you bought it, on this breakout of the 50-day moving average or whatever your rationale was, or oh, hey, there's a horizontal breakout. Those are really pretty damn meaningless, to be frank with you. Those are just temporary support and resistance levels where you're going to see the stock pose, and it gives you some clues about how strong buyers and sellers are at that particular point. But you need long-term sustained buying or selling. And that's when you get those super, super tight price patterns. Those are your keys to trading. So um, anyway, enough of here. Maybe I'll put this video up. Can you predict where these geese are flying? Yes, I have a pretty good idea that they're going to continue on that path. Can you predict where this bat is going to fly? No. So stop trying because you're going to lose money.
Around,
All
see if
right.
there's
So,
anything else. I know we still have some lingering questions there, but um, yeah, the mindset and the mentality. I mean, now they're pretty game. Oh, look, but look what happened to Oracle. It retraced. So what if AMD does the same thing? You know what? You go right ahead. You short it then. Go ahead. See how it works out for you. And in fact, the worst case scenario for you would be shorting AMD right now and AMD dropping and you make a profit. Believe it or not, that is your worst case scenario. That's like going to the casino and you put most of your money down on red 7 and you made money. Chances
so,
are within a month you will have lost what you have won and then more on top of it. I mean, there's some of the reasons why traders lose money is complex and you really have to go deep into the minutia of it. But some of it is just really painfully simple. Uh, Profitable traders, consistently profitable traders. And whenever Pete and I say profitable trader, we mean consistently, month after month. This is how much you made. You take it out of your account. You pay your bills with it. You can count on it. You are a trader. It's what you do for a living. Consistently profitable traders would never, ever, ever look at a chart like AMD and think I should short that. Period. And that should tell you something. That should tell you all you need to know. Just like a consistently profitable poker player would not look at ace rag under the gun and think I should raise this. But an experienced poker player would think, "Oh, I got an ace. I'm gonna raise the blind." Uh, Follow the people, listen to the people who are consistently profitable, not the people who are anecdotally profitable.
so let's turn this into a learning experience. Oracle. What's the difference between Oracle and AMD? So you get this huge earnings gap up and this outrageous guidance that fuels this stock, I think 35% higher overnight. It never makes moves like that. This is a stodgy tech company. Okay. It's a grinder. So you get this big pop up. Okay. Well, is the news legitimate or not? I don't know, but I'm going to watch price action and I'll get my clues from price action. So here you get a bearish engulfing candle the very next day. Oh, okay. Those profit takers actually had some say in the matter. And so now you see follow through. When I start seeing, hey, this profit taking is pretty substantial. The stock is not making higher lows, not at all. Oh, you got a couple of green candles. Would I bite in here? No, I wouldn't bite on that either. I'd be watching to see if it can get through this resistance level with some follow through. And now you're starting to see some retracement. This tells you that that selling pressure is fairly great up here and that the stock is not ready to go. What would I want to see before I take a position in Oracle? I'd like to see this nice support level establish itself. I'd like to start seeing some relative strength. Green line above zero, red line is below zero. It is weak relative to the market. So I want to start seeing some signs of relative strength. Market down, stock up. Market down, stock up. Market down, stock flat. Okay, now I know that buyers are out there and that this is a decent support level. Then I can start taking a position in Oracle. So would I short this? No, I wouldn't have been in here shorting this either. Not a high probability trade. Your odds aren't there.
I like Dell, by the way, Pete. I don't know if it's my pick of the week, but if Dell can get above VWAP here, I had a little pullback, but it's went up quite a bit today. I like the chart on Dell quite a bit. Someone also just asked on Dell. Um, if Dell pops above VWAP, I'd consider it for a long today.
Okay, you've got your breakout in there. Yep. Yeah, Dell doesn't make big moves either. That is another choppy one that, it looks great and then it kind of falters. You got a couple of long green candles here and then it pulls back. So I would definitely try on a pullback
Hmm.
versus chasing a breakout like this. So, but yes, it is a nice breakout. VKTX, someone just asked about. That's been pretty nice. That is a biotech company. It is a one trick pony. Okay, so you have to be careful with it because they've got a GLP-1 drug that's coming to market. They are still getting through phase 3 clinical trials, and whoops, not so good. And that stock got basically halved. So, yes, short term basis, I think the stock looks pretty decent in here, but you need to be very careful because it is prone to news. By the way, here's a really good tell too. Do you see this volatility spike in here? This is historical option implied volatility. We measure this in Option Stalker Pro. When you see a spike in option implied volatility like this, normally that would be associated with a drop in the stock because that's when uncertainty increases. When the stock is going up in price, you're normally going to see a drop in option implied volatility because there's less uncertainty. In this particular case, you had that option implied volatility spiking because market maker firms knew the news was pending. They didn't know the exact timing, they didn't know the date, they didn't know the outcome. So they juiced the hell out of option premiums. And we could see that in here. So if you're buying this breakout, going, yippee, earnings release, breakout to a new high, and then you see this option implied volatility spiking, that was a warning sign. And then
Just want to note AMD's up
uh,
$2 since you suggest since the genius suggested shorting it.
okay. Yeah, so the stock AMD looks good. Anyway, you're not a genius, you're not an idiot. We're teaching you what to do in the price action
No, no, no,
market.
no. The person who said short AMD is an idiot.
Okay.
You're too nice.
I am nice in this one because there are there are gaps up that I will short, but you have to know which is which.
Well, that person's
You
got a
play
gap
poker.
already. Chromosomal.
Okay, JOBY. I already gave that analysis. So go back and watch the live event tape recording, and you'll get the lowdown on that. DPZ. That actually did look like a good short. I bought that up a little while ago.
Dominoes.
And Harry's favorite pizza.
Shitty crap. Bunch of shitty crap. Although I'm from New York, right? I'm from Long Island, where we have amazing. There was amazing pizza in the average, mini mall. So
So there is, yes, there's your breakdown. Again, very difficult to short in this market right now. So I would not be focusing on shorts, but as soon as you start getting into retail and restaurant stocks, those stocks are pulling back because we've seen consumer sentiment continuing to decline. You've got recent job losses. So I'm expecting to see a fall off in consumer spending. And yes, so these stocks are going to be weak relative to the overall market. You can bring up CMG, Chipotle, Starbucks. Casino stocks are relatively weak too. I was looking at Caesars this morning, MGM, CZR. That looks like a weak stock to me. I like that breakdown right in here. That is a decent short. You can see these trend lines have been breached. So I like that short. And MGM also looked like a good short. MGM, they're going to be giving an update next week on their online betting platform. So if you're trading stocks like that, you should always be aware of any kind of pending news that's coming up because that will impact the stock.
um, look, I mean, I think we are somewhere in between Spy 700 and killing your neighbors over clean water. I mean, anything could happen. in the next couple of months. This market certainly has been defying a certain amount of reason in terms of, I'm just talking about the historical stuff. When you look at historical valuations, you look at the Buffett measure, you look at all these things, right? It doesn't take a genius to look at the market right now and go, oh, it's due for a pullback. The problem is, of course, we've been saying, and other experts and all these people have been saying it's due for a pullback for quite a long time. Um, and the story keeps changing, right? The same group or article or author that would come out and say this market is way overvaluated 2 months ago, it would probably come out now and say, oh, we're looking at there's plenty of still more room to grow. I think a lot will come down to this earnings season, a lot more pressure. The higher the valuation, the more pressure there is on earnings. So it does that mean you should start shorting earnings? No, of course not. The way this market has been going right now, it's bullish. It's a bullish market. I am bullish. I am taking bullish positions. I am long. Mainly, most of my swings are long. Yes, I have a hedge, but until you see otherwise, this is a bullish market, no matter how much you believe it shouldn't be.
Well, if you're bullish, then how come you're long SPY puts?
Because I like the hedge, but I'm playing the price action, and the price action tells me to be long a tech stock like Apple. I'm long a bio stock like Oscar. I've been playing longs on the day trades. I do love shorting Tesla. It's a fun damn stock to short, but I'm playing the price action, and the day trades and the swing trades are probably 70, 80% longs. But yeah, I am keeping that back pocket, those back pocket leap puts as a hedge.
Just a point about Warren Buffett and valuations and all this stuff. I mean, you can't always compare one market to the next. I'm seeing some fundamental things right now that have me very concerned that I did not see in 1998 and 1999. Apart from that, you had Alan Greenspan talking about irrational exuberance. Warren Buffett was largely in cash in 98, 99, and he could see where valuations were. So his model told him to go to the sidelines. And the market rallied like mad well after that. Uh, I think it went up about 100% in 3 years from the time that Alan Greenspan made that comment. And so you had all these analysts out there talking about how Warren Buffett is washed up. He's an idiot. He doesn't know anything. This is the new age of investing. It's the internet, for crying out loud. Do you know how big this is going to be? You're starting to hear the same types of things right now with cryptocurrencies and with AI and how big this is going to be. So it can continue for quite a while. So that's why you trust the price action that you see before you. And right now, we're going to be shifting from a period of seasonal weakness in the next couple of weeks to seasonal bullishness. And asset managers like to be long stocks into year end. I've traded for 30 years, and that's one of the things I absolutely depend on. They want to mark up those portfolios into year end. And if we weren't going to float higher, you would have already started to see some cracks in the dam. We aren't seeing any. So, what I believe is going to happen, provided that the shutdown doesn't last another 3, 4 weeks, I think you're going to see little tiny gradual float higher. It's going to be same conditions we're trading now. It's going to be relatively difficult, but those portfolios are going to get marked up into year end. Asset managers are going to make their nice big fat bonuses, and there's disincentive for them to sell. And there aren't any signs right now that there are not any cracks in the dam right now, technically, that tell me that this thing is just going to absolutely roll over and collapse. Could we get a nice little dip in here above the 50-day moving average? Yeah, somewhere along the line we could see that, but this is looking like it's just going to continue doing what it's doing to me. So I'm sticking with selling out of the money naked puts. I
I like that.
am selling bullish put spreads. I am day trading on a short-term basis. That's how
All
I'm
righty.
addressing the market. Let's see. I got to come up with a pick here too. If I had to pick, I am long GLW. I like that stock, so I think that's going to continue. This stock has been so nice, strong, and steady that any pullback is a buying opportunity in here. So yes, it's one that if I could get any decent premium on it, I would look to maybe selling $80 put to try and buy it below that EMA 8. So I think that's going to be my pick of the day.
And I'm along Apple, and I have those upper and lower bounds, right? So I'll be watching those 256 on my lower bound, and then if it breaks out of the upper bound at around 260 or 259, I will add to the position. So I have a very tight channel on that. I'm looking for a breakout of the channel to the upside, and that's where I will add to the long if it breaks.
Okay, and PGY is a late request here. You like that stock? It's coming up on a major support level right in here. Looks to be finding pretty decent support. It's been relatively weak. You do want to see it start to show that it can move higher off of this level, especially when you get an up day in the market. You want to see that stock participating. The fact that we had a down day yesterday and the stock did not fall, that's one nice little sign of support in here. So I think you could have a good one. And if you really like that stock, you can see the 100-day moving average is at 27.74. So maybe selling a 27.50 put on that is going to get you below that 100-day moving average, and you'll be able to lean on that support. And you can't get a whole lot of money for it, but and it doesn't have weekly options. So but overall, yes, it's starting to finally get there. And I love this right in here. All those long term buyers, look at how nice and steady that price action was, got ahead of itself, finding support right in here. I think you've got a good one. So nice pick.
And for those of
All
you
right.
who want to join the chat room or check it out who aren't in there already, you just go to oneoption.com, sign up for the 2-week trial, hang out in there. I'm always in there. Pete's always in there. A lot of great traders are in there. See what's going on. You get a lot of great analysis from Pete on the market, a lot of great trade ideas. You get a lot of times where you get called out by me when you make stupid trades. Some people are masochists, I guess, and like it. So look, it's a 2-week free trial. You don't like it, then you leave. I'm in there every day. Love the community. Been there since but over 5 years now. So uh, anyway, hope to see you in the room. And for those of you who are in the room, you know, hope to keep calling you out or start seeing some good trades, which we are, by the way. We saw a bunch of great trades this morning, and I saw that not Pete, Dave, by the way, just went long CoreWeave, which risky stock, but I
Yeah.
like.
And along those lines too is I've got great education. I've got a course that I've written called The System. You don't have to sign up for our services. Come in and read that. I know is going to help your trading. That is the basis for all of our trade decisions. So again, it's not public, but during the free trial, you can read the whole thing. It'll probably take you close to 2 weeks to read through it anyway. So CoreWeave, yep. All right. Hey, if Dave's along, he's got something he likes about it. And I think he's liking that EMA 8 bounce right in here. Stock pulls back to it and has been relentless today. Put up the 5-minute chart. And there it goes on decent volume. So cool. Thanks so
Yep.
much for attending, everyone. We'll try and do another one in the next 2 or 3 weeks or so. Hope to see you then.